What's up, YouTube? Welcome to my channel. I go by the name of Aphiwe.Zunguu on Instagram. So basically, in today's video, I'll be basically analyzing the market, or basically shooting some forex trading content, basically showing you what I'm seeing inside the market and how I analyze and get to basically trade like I do. Now I mean, so basically, I am the youngest forex trader in South Africa, which is very crazy. I'm the youngest trader in South Africa. If you believe it, you can actually see that. Yeah, this one is the youngest, not me. But however, we're about to analyze the market and everything. So be sure to like, comment if you're new to the channel, subscribe. It's my first ever video. So yeah, like more consistent videos are coming through and everything. So I'll be basically shooting more content about the forex market, basically showing you what I'm seeing inside the forex market and how to actually capitalize in this day and age, right? I'm the youngest trader in South Africa, and yeah, man, we're about to fuck shit up. 2022 is ours. There's still 4 months left. You can still make something big in that 4 months that is left. But 2023 next year will be a very great year. More consistent videos are coming through. More financial market breakdown videos are coming through. So be sure to follow my Instagram to basically DM me and tell me what kind of videos you like to see and everything like that. So be sure to like, comment if you're new to the channel, subscribe. So basically, please let's hit like 20 likes on this video. 20 likes just for good luck. You know what I mean? So please let's hit 20 likes just for good luck. More consistent video coming through. I pay the coach your mentor. Yes, sir.
Analyze gold, and then AUD will come like in part two or something, right? Okay, bit. So in analyzing, I usually start on a daily time frame in order for me to basically analyze the market. I basically start on a daily time frame, and from a daily time frame, scale down to your 4 hour time frame and 1 hour time frame, and then 15 minutes for entries, basically. So that's basically how I analyze. You know what I mean? So first things first, in me analyzing the market, I need to actually zoom out to see the charts more clearly. I hope everybody's taking notes. I mean, so basically what I do is that I zoom out to see the charts more clearly, right? Because I'm trying to see previous data, what happened in the previous times. And then when knowing that what happened in the previous times, and then I can take my trades off of that. Because I'm a technical trader, you know what I mean? So as I see that the market was in the bullish trend, now currently we in a consolidation trend, right? So the second thing I like to do is to go to line charts to basically cut out the noise, because if you go to candlesticks, you can actually see the big weekly creations that the market was creating and everything, right? So I basically go to a line graph to actually see the chart more clearly and cut out whatever the weekly creations are creating. Because if I don't want to cater for weekly creations, I want to cater for the actual market. Because first reading is really real. I mean, so okay, in analyzing the market, I basically analyze my high of the day, as I can see right here. This was like basically my high of the day, right? It's lagging. So basically, this was my high of the day right here, it's like that. Yes. So this was basically my high of the day. So this was basically my high of the day. High of the day and the low of the day. So you can basically see where are your playgrounds. Because in understanding where are your playgrounds, you can actually take your trades off of that. Because the forex market is basically like summarized as we buy low and we sell high. You know what I mean? It's basically summarized with that, right? So you can actually see that, okay, fine, we are in a consolidation trend. We're playing inside this playground over here, right? So we're playing inside this playground over here. We are buying, we are selling, we are buying, we are selling, but we're not breaking. If we actually break, that means that we have to go to the downside or the upside. You know what I mean? So as you can see that, okay, we are playing inside this trade. Now I can actually zoom in to identify my significant levels, right? So I can basically zoom in to identify my significant levels, right? Your support, your resistance, and everything, right? So I can basically see that, okay, we are at support right now. We're almost at support and everything, right? So if I can take a zone, something, or rectangle to basically draw, I can actually see that, okay, my analysis is actually proper, right? So if I can like make it like this, I can actually see that, okay, my analysis is actually proper. We add support. And every time when we add support, we're supposed to expect buying opportunities, right? Because every time we support, you wanna buy, right? Every time we support, you wanna buy. Every time we get support, you wanna buy, right? You wanna buy every time you add support, right? Same thing, at resistance, it's almost like the same scenario but different action or something, right? Because at resistance you wanna sell. Support you buy, resistance you wanna sell. Just take it as your floor and ceiling. At the floor you actually you're actually supposed to buy at the floor, and at the ceiling you're supposed to sell, right? You can basically summarize it as that. That's like the easiest summarization I can actually put it for you, because at support you wanna buy, at resistance you wanna sell. I can basically take it as simple as that, because at resistance you wanna buy, at support you wanna sell, right? So okay, we have already identified our our levels, our high and our low. So if you can actually zoom in and actually see that, okay, we are at support. We are at support, as you can see that we are at support. At support, you're supposed to expect for what? Buying opportunities, as I told you right now. If we were at resistance, you're supposed to expect selling opportunities, right? Okay, fine. Now you should basically identify, okay, where are your turning points? Okay, in identifying your turning points, you're supposed to have three or more touches to make it be a valid significant level, right? You're supposed to have three or more touches to make it a significant level, right?
Pretty sure you can hear me and everything, but I'm gonna increase the audio and increase the way I talk. Right? Okay, fine. So in identifying your significant levels, you should actually see if they have three or more touches. As you can see right here, let me just take my brush to basically draw it out for you. We had a touch right here, we had a touch right here, we had a touch right here. Like it has basically more than three touches. So it's basically validated as a turning point or a turning area in the market. Right. I'm gonna explain further how does that help us analyze the market, or how does that help us take our entries, right? Okay, fine. If I can actually dive in deep, I can basically see that we also have a small turning area right here. Like it's not that big of a turning area, but it's like I can basically see it's in the market, and I have to capitalize for it because it's near the current market price. So I bet I have to continue analyzing the market. I can basically see that we had a sensitive area right here, but it's not that much of a sensitive area. I'm just gonna put the other horizontal line, just to know it's okay. It's a less sensitive area, right? If I put the yellow one, that means it's a less sensitive area. If I put the red one, that means it's a very high sensitive area, right? So there's no actual numbers or amounts of levels that you should actually put in. You can put in as much as levels as you want, but at least if you can understand your analysis, that's fine. If you can understand your analysis, that's fine. And I'm not saying cater for everything. Cater for the areas that you see that they are most actually they are actually like very sensitive, right? And cater for the areas that are important. I'm not saying cater for everything, cater for areas that are very important. Because if you cater for everything, you end up getting lost yourself in your own analysis. And that's what something that we don't want to do. You know what I mean? I bet I can actually see that, okay, I've marked out basically every sensitive area I'm seeing. I've marked out every sensitive area I'm seeing, but this was just like a consultation and everything, but I'm just going to cater for it. But I've marked out every area I'm seeing, right? Okay, fine. Now, the second thing that you should do is that identify what kind of trend are you in. And some of you are asking, Apia, what do you mean by what kind of trend? Right? I'm just going to throw it out for you so that you don't get lost. So, uptrend is basically buyers, right? The buyers are in control, but the market is moving towards the upside. And then the downtrend is basically the same scenario, but it's going towards the downside. And the consolidation trend is when the market is basically buying and selling and buying and selling, but it has no overall direction, right? So in identifying your trend, right, you should basically cater for the lowest part and the highest part to make your trend validated, right? And in order to see that your trend line is validated, you're supposed to have two or more touches, right? You're supposed to have two or more touches to actually validate that the trend line is very much validated, right? As you can see right here, I'm just going to use my arrow. You can see that we had a touch right here. We had like a touch, anticipated touch and everything. And then a touch right here, we had a touch right here, we had a touch right here. So basically, our trend line is very much validated, right? So this is a consolidation trend where the market has no overall direction. It's just buying and selling, but it has no overall direction, right? So it actually helps us a lot in creating our predictions because we're not trying to enter in a market that's stagnant. We're not trying to enter in a market that's basically playing around and has no overall direction. Right? We're all trying to make money. We're trying to catch that buy or that sell and then we're out. You know what I mean? We're not just trying to stay in the charts for like too long, unless if you're a swing trade. Right? So this is a consolidation trend and this is an uptrend. Right? Okay. What do we call this line at the bottom? Just like, and then other name for it is our supporting trend line. But the simplest way you can call it your supporting trend line because that's the simplest way you can put it, right? Or you can just say your supporting trend line or your uptrending support trend line. It has like a lot of names, you know what I mean? But the name I'll kindly use is your uptrending support trend line so that you don't get lost in the source when I say your uptrending support trend line, right? So this is your uptrending support trend line, and this is your uptrending resistant trend line, right? So same thing, same scenario, right? This is our downtrend supporting trend line, and this is our downtrend supporting resistance, right? So please name this one for me. What's it called? I'll give you like 10 seconds to like name it. Right. It's your uptrending support trend line. So please don't get lost in this because once you miss the basics, you won't be able to manage the high responsible of being a trader in this day and age, right? So I've pretty much identified everything for you. So this is our diagonal supporting trend line or vertical support or this vertical resistance, right? So it's basically the same thing, same names, but different scenarios, right? Oh, good. You see that we are in a consolidation trend as we identified over there. We can actually see that we're in a consolidation trend. But however, there are still downtrends and uptrends inside the consolidation trend. So that's what we should cater for. But we actually can see that we're in a consolidation trend. Right? Alright, great. Right. So I can actually zoom in now because now I'm just trying to cater for my trend lines and everything. So Okay, I can actually see that we are in a downtrend. I can actually see that we are in a downtrend, right? Because now we're not trying to focus more on what's happening in the previous data. We're trying to focus on what's happening in the current market price because we're trying to take trades in it. You know what I mean? But we're not going to take trades in a daily time. Okay, I can actually see that we are in a bearish trend towards the downside. Right? I can actually see that we're in a bearish trend towards the downside. And I told you how to actually see that the trend line is validated. Suppose you have two or more touches to actually prove that your trend line is actually validated. Right? If I have to clone this, I can actually see that it's the same thing. You know what I mean? So what do you call this again? Like it's just a question for us. I'm just curious. What do you call this again? This line, this black line at the top going down. Right. You call it your downtrending resistant trend line. Now I mean. And what we call this one is your up. I mean your downtrending supporting trend line. So you mustn't get lost and miss the basics. You know what I mean? Once you miss the basics, you won't be able to know which one is which, right? So we can basically see that okay, the market is playing inside this trend, right? And we know when to buy. We buy low and we sell high. We buy low, we sell high. We buy low and we sell high. It's basically the simplest summarization you can actually put it, right? But that's basically the simplest summarization you can put it. It's basically summarized as you buy low and you sell high. Okay, fine. Going back to our analysis, you can actually see that we're in downtrend and everything. So I'm just trying to hurry up and wrap up the video because I don't want it to be that long, you know what I mean? So you can actually see that, okay, we are down pretty much at the day time frame. You can go down to a 4 hour time frame. Going down to a 4 hour time frame, if I can zoom out a little bit, you can basically see that our downtrend is pretty much validated, right? So putting a zone is also very much of a need to actually cut out the noise when you switch into candlesticks because not every time you're going to keep to your horizontal lines or your line graph. You know what I mean? Because switching out the line graph, it helps a lot, but sometimes it doesn't help. Everything has their advantages and their disadvantages. You can actually see that, okay, fine, we were in an uptrend, we broke out, now we're currently in a bearish trend. So we have a bearish trend inside the overall bearish trend. So that's like pretty much what I can see in the market. Right? We had a counter trend towards the downside. Right? If I can cater for the first uptrend, which is right here, this was our first uptrend. This was our first uptrend. And if I can cater for a downtrend, I pretty much can see that in downtrend. And this was pretty much a breakout retest, right? But you're gonna learn about this when time comes by, because I'm not trying to like dash out knowledge that is very much like variable in one video. You know what I mean? I'm not just trying to dash out everything, but Forex doesn't end because Forex never stops teaching and you never stop learning yourself. So putting in zones is very much of a need to actually see that you can actually know that okay, to basically know that where is your support and where is your resistance, right? So what I'm putting right now, because the market hasn't reached that area, it's our resistance, right? If the market is bounced off of that, that means that's our support. If the market failed to bounce off of that, that's our resistance, right? So I can basically see that if I had to take my entries, right? Now I'm just trying to look at it. If I had to take my entries, it's either I'll take it when the market has actually cut, because I don't want to take those short movements and everything. I was supposed to buy over here, but I didn't. So I don't want to buy over here, because if I buy over here, it will either turn right here or turn right here, because it's near our trend line and everything, right? So where I'll buy when if the market breaks out and then retest this, I will retest over here, break out and then retest, and then this is where I'll buy, because I know that the market is out of our bearish trend, right? And as you can actually wrap up and see what happened in the daily time frame, if I can go back to the daily time frame real quick, you can actually see that we are support, right? So at support, if we're at support, we're supposed to expect buying opportunities, right? So use that data to actually validate your setup, right? So you can actually see that at support, we're supposed to buy, right? So if I had to take my entries, either I'll take it upon breakout retest, because there's a rule I set for myself that no retest, no entry. If there's no retest, I don't take an entry. Right? I don't want to enter on the impasse, because in the impasse, there's still a lot of confluences that the market might turn and keep playing around. So I take entries upon retest, right? Because I'm a swing trader, it's either I'm gonna swing it to the top right there. Because I'm a swing trader, I can swing it until the top right there. Swing it until the top right there. But if it fails, and like keeps playing around and then stop playing. As you can see that our trend line is pretty much validated, right? So this is like possibility number one. Possibility number two is either the market can like turn from there, then from like buy, and then from there turn towards the downside, right? That's possibility number two. Possibility number three is that the market might buy, right, then turn at the trend line, and then go back down. That's possibility number three. However, if the market turns and fails right there, if the market fails right there, we know that we can take our entry. So support, we know that we can take our entry to the support. So that's pretty much how it's basically identified as your life. We can basically see that we can actually cater for both possibilities, right? If the market breaks out, we're still going to take a buy. If the market doesn't break out, we still can take a sell. So we're catering for both possibilities. We're not losing, but we just want to win from me, and we will win. So nonetheless, thank you guys for tuning in to this far. Thank you guys for the mad love and support. It's a beautiful journey. So if you reached this far, please just comment 2023 is ours. Just comment that 2023 is ours. But nonetheless, it's a beautiful journey. So yes, sir. Thank you guys for tuning in. Thank you guys for liking, commenting, and subscribing. More videos coming soon. It's a beautiful journey. So signing out. Yes, sir.